Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 9th of September. All right, now as we edge closer towards the ECB meeting, right, the US equity markets just a little bit off. There was the US 30 years are holding their gains. The 10-year went from, I think, 138 down to 133. Bit of a little shock wave through the bond market there, but stabilized. The 20-year still up there. It was off a little bit as well. But I mean, if I just show you the yield curve there, you can see where it's sort of just rounding out a bit. You'd expect that to happen, just the yield slow down, the rally in the yields to slow down as we approach the ECB. There's a bit of uncertainty around that. But really, there's not a lot happening because otherwise the equity markets would be moving with it as well. And the equities, it's a good sign of, is the move in the Treasury bonds real or big enough to impact the rest of the market? Well, the equities would start to move the opposite way, right? So if yields are up, equities come off and vice versa. So at the moment, it's sort of steady as we go, a little bit of squaring up ahead of the ECB. Now, just looking at where the dollar is, right? I mean, on this chart here, you can see it's still a little bit higher from where we were, okay, on the back of the stronger yields and almost a little bit of a dollar safe haven situation. But we aren't seeing the follow through just yet. And this will probably come from the ECB, right? So we finally got the little breakdown here in the euro. So it's breaking down, the whole dollar block sort of edging lower. I don't think this dollar strength is, I don't know, it just doesn't seem as tangible. I still think there's room for another 50 odd points or more in some of these currencies, but I still can't see the dollar rallying aggressively ahead of next Tuesday's CPI numbers, right? There's too much on the line for those CPI numbers. I think that's where we'll get the defining answer where the dollar goes from here. Don't forget, we just had the non-farm payrolls miss the mark. So the dollar should be, if anything, trading sideways with a slightly weaker tone, and it's not, right? It's more around the ECB more than anything else, right? So let's just wait and see how this plays out. Dollar CAD is, man, boy, it's up in the middle of nowhere. It was heading up towards 129. We saw oil dip under 68 bucks. It's now back at 69.20. That's going to confuse things somewhat. The Bank of Canada, we had today or yesterday come through. If anything, this is what the central banks can do. They're almost cherry picking. They're saying, look, we've seen a bit of a downturn in economic growth, but it's going to come back, right? This is a short-term blip on the radar. The plan is still the same. So let's just see how it works out from here. So there's a bit of like a lack of liquidity around that event. And that actually is where we saw that massive spike in the currency. Not a great idea to be trying to hang on to positions and trade around a central bank, around comments and those sorts of things. So that builds us up for the next round of economic data. If the data starts to show us weaker signs in Canada, well, then the Bank of Canada next time is going to have to come in and probably change their narrative, right? And that's where we'll get the cleaner move, more directional, transparent move on dollar CAD from there. So from here, dollar CAD really becomes active. It's already up in the boondocks there. So we'll just have to see how that plays out, but pretty tough trading right up here around 127. There's no sort of, you got the big round numbers, but even some of those are blown out, right? There's no sort of support or resistance levels around there. Whereas the pairs down the bottom here have got a bit of direction. We've got trend lines, whether we're looking for retracements or breaks higher. As I said, I still think the dollar, it doesn't look like the market's long dollars. So it could be a bit of a squeeze, a little bit of a move higher after the ECB, depending on what they say. I'll come into that in a second. And then I think that'll be it. It should start to peter off and start to trade sideways as we move closer towards the end of the week. Next Tuesday's CPI will be on a huge focus once the ECB's out of the way. Don't forget, we've got Canadian employment numbers come Friday as well tomorrow. So that's something else to think about. That's a potential momentum event, right? That you can just zone in on because we know the exact time it comes out and the data. Whereas the rest of the week, we're sort of trying to piece it together around what's happening. And obviously the ECB is a major component of the market's focus. So watching the US Treasury yields, which seem to be the flavor of the week, right? And just keep an eye on the US equity markets, right? They are very sensitive to anything to do with interest rates, okay? And the yields on the bonds is interest rate related. So when they start to move and follow through, you're looking for, say up towards 0.75, 1% moves, that's when it's significant. So make sure we're waiting for that as well. That'll tell us a lot about what the US dollar is going to do, right, as well. Treasury bonds, equities, ECB. Now, coming back to the equities, to the ECB, sorry, there's a fair bit of speculation around what's going to happen. And this is just clicking into this story. You can come down, you can get some components here around generally what's going on in the market, what people think, get a few opinions from various analysts, etc. But what I'm really interested in is anything to do with the euro. So there's been a ECB policymaker, Robert Holtzman, okay, starting to say, the inflationary pressures could prove to be persistent. Okay, that's, say, heading towards tapering. Their PEP, okay, the Pandemic Emergency Payment Program, something like that. It's, one of these great names they've come up with. But the key part to this is trying to work out what's their forecast for what the ECB are going to do. Now, there's a bit of a poll here on Reuters. Says the purchase is falling possibly as low as 60 billion euros a month from the current 80 billion. Now, there could be a change. There may not be, right? So the market, we want to wait and see what the change is and what comments they got to say afterwards. It's not exceptionally clear cut. Every central bank would love to start tapering their asset purchases. It means they're moving back to normal markets. Then they can start controlling the economies through interest rates again. At the moment, they've got to taper all their asset purchases, stop them, then start to work with interest rates and then slowly unwind all their asset purchases. And the Fed tried this a couple of years ago and the market fell over. So anyway, I don't know how they're going to do it, but just be aware, it's not clear cut. It's not like there's a clear number that we're focusing on for the ECB with their reducing their purchases, right? So you've got to keep an eye on the US Treasuries is probably the closest one to it. Or if I just switch you back over here, make sure if you need a service like this, but I know everyone doesn't have it, keep an eye on the German bonds or the overall European bonds, right? You get a bit of an indication straight away from on the bond movements, what the ECB announcement, what impact it has, and that will impact obviously euro directly, right? Like if the yields start going up, well, you'd expect the euro to rally a bit. If they drop off, well, then euro's in the gutter, and those US bonds probably go up, and we see euro lower. As I said, I don't know. This is just a part of the ECB starting to connect with the market again. So, is this a long-term US dollar move? I don't think so. Not just at the moment. Because if next Tuesday's CPI numbers are weak, right, then the Fed probably aren't doing anything this year. Right, there's still a lot of rhetoric around the Fed. We're on target, all this sort of stuff, and they've got a clear plan, but the plan includes, maximum employment, and they're going to be watching inflation. So if inflation drops off, the pressure is off the Fed. We've already got weakness in last month's non-farm payrolls. They're probably sitting back going to September. Not going to do anything October, November, December. It could be January or early next year. Now. And why we're sort of focusing on this, it's all about trading momentum and directional moves in the currencies and the other instruments. So we are watching this. This is like a football match where we're in the first quarter. We're watching, or a basketball match or anything. We're in the first quarter. We're looking for the next move to get the next move in the financial markets, so we can make some money. Right? That's what it's all about. So it's going to happen at some stage. It's just a matter of when. Get the timing right, then you're in the right currencies in the right direction, and away you go. All right, so that's where we are. ECB is the main game here, right? So tune in for that. Now, I would advise you to go to the ECB website. All the news and data that comes out from this is released on their website at the same time as Reuters and Bloomberg and everything else. So even if you don't have a news service, get up the ECB page. And actually, a lot of them, Mario Draghi was on doing live webinars all the time. So Christine Lagarde, she's probably doing the same thing. Get it up, focus on it, have a look at what the expectations are. You can Google that, and then we'll see where everything goes from there. It's going to be pretty interesting. You know what? Liquidity around the announcements will be thin, right? So don't expect, you know, you can just jump in and be nice, happy trails. I'd say for the first 1 or 2 minutes after the releases, Euro may be quite volatile. You may see a few spikes. Okay, what we're looking for is the overall movement, and especially where Euro is just at the moment, it's a little bit, you know, below support. Ideally, you'd love it in the middle of the range there. So it's got freer room to move. What you want to do is check out all the Euro crosses and find the best technical pairs. That's probably the easiest trading opportunity. All right, that's a bit of a mouthful, but hopefully that explains things. During that Asian session, as we go through Asia, keep an eye on the US equities for general sentiment. At the moment, they're down, a bit of a risk-off situation. You'd think a bit of pressure on the dollar block, which is Euro, Sterling, Aussie, Kiwi. Obviously not seeing too much movement here. The daily change is barely minimal. I mean, it's only a couple of hours, 2 hours 45 into the new day, obviously after 5 p.m. New York. So not much movement just yet. I would think the currencies would trade sideways into the ECB, barring any left field geopolitical event to come out. All right, so that's it, guys. Tune up your charts. Euro's the focus. Get ready to hit the market if we have clear trading signals. All right, good luck. Cheerio.